If there's a FAANG stock you would have wanted to be in over the last year, it's Apple, which we rate at 8 out of 10. Only Twitter garnered more interest according to Trackstar, our proprietary sentiment indicator, and Apple's returns are reflected in this interest. While Apple sometimes feels like it flies under the radar relative to other FAANG and high-interest stocks, it stands at the top of the heap from both investor interest and performance perspectives. The one-year chart says it all, and if we expand that out to 5 years, then Apple's return as of April 2022 trounces the others on the upside. In today's edition of The Spill, we dive into Apple and ask if it's still one of the soundest long-term investments. Apple designs, manufactures, and markets consumer electronic devices, including iPhone, Mac, iPad, and wearables. The company also produces revenue through a slate of services, including digital content sold primarily through its App Store and platforms. It can be difficult to make comparisons between Apple and other companies because you can't easily classify Apple. It's its own products meet services ecosystem play. Apple's P/E ratio is relatively high versus pure-play hardware companies, but if you compare it to FAANG stocks or Tesla, then Apple looks like a bargain, especially on a price-to-sales ratio of just 7 times. Apple is a cash cow. Its free cash flow generation ran at almost $106 billion over the last 12 months, and its debt-to-equity ratio is around just 1.5 times. Apple pays a dividend, which it's raised consecutively for 9 years by an average of 9%. Looking under the hood, you can't beat Apple. True reliance on Chinese manufacturing could be an issue. However, Apple's growing services revenue can act as a hedge. Overall, Apple remains an excellent stock to add to your portfolio, particularly if you're an investor with a long-term time horizon.